Hello, traders. It's 8:06 a.m. Chicago time on the 16th of April, 2019. Happy Tuesday to all. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry about the delay in getting started. We're about 6 minutes late. Microphone issues. Just couldn't get the microphone to respond. That's what you get for letting your son play Fortnite on your machine. Um, So we'll get past that. Um, this morning, the allocation is clearly to risk. We have a pop higher in the equities globally. Really, the DAX leading the pack up 88 points or 0.73%. The Dow's up 161 points or 0.61, and the Nasdaq's up 32 points or 0.42%. The gold is taking a bit of a hit. Down $10.10, down 0.78. The pound, the bonds, the 10 years, the euro, and the bund are all below zero, below settlement. And of course, so is the volatility index. The VIX is squeezing lower. It's down at 1240 currently, and just consistently dropping. Those volatility traders. Who are not short are probably feeling it. But generally, people want to be short the VIX anyway. It seems, at least the ones that I know who trade it. So that's the stance today. What has hit the tape overnight? We did get the RBA meeting minutes last night, my time. We also got an important figure, house price index in China. Came in at 10.6, prior is 10.4. The forecast was 11.4. The zoo came out really strong, came out at 3.1 versus the expectation is 0.8. The prior is negative 3.6. Negative 3.6 came in positive 3.1. We did have some numbers this morning, industrial production and so on. Well, we will have them here in 7 minutes. Industrial production and so on. In the US, we have NAHB Housing Market Index a half hour after the open. We get Fed's Kaplan at 2 p.m. Eastern. And then after the market close, we get the API crude oil stock change at about 4:30 Eastern. Tonight, Japan releases its balance of trade, and we get a bunch of numbers from China at 10 p.m. Industrial production, retail sales, fixed asset investment, GDP growth rate, and so on. So as far as we're concerned for this session, there's not much on deck that is likely to be high impact. One thing that we should remember is that this is a shortened trading week. Friday is a holiday pretty much across the globe. The US markets are closing for Good Friday. So there is no trading on Friday at all. So we basically end on Thursday. But also some really big earnings releases this week. We do have a lot on deck. Bank of America came out today, but there's some high revenue companies that are likely to release. Johnson & Johnson released, and so on. And so keep an eye on the earnings calendar. Expecting some surprises this week, and the market's really paying attention to earnings right now. So this is likely to be the catalyst. We're not seeing much on the calendar for the rest of the week, but this is likely to be the catalyst, which is great. I like a market that's moving on earnings rather than central bank or geopolitical changes or headlines. So that's that. Let's take a look at what we expected yesterday versus the actual. So yesterday, the main expectation was for the market. We were opening in range in an upper distribution on a double distribution day on Friday, And the expectation is that we're likely to dip down into 29.1050, consolidate for a little bit, and then push the high, the 29.1475 put in on Friday, push that high to continue with the higher low, higher high theme or higher low theme for one-time framing up towards 26.23 and 26.27. I mean 29, 23, 29, 27. That was the main trade idea. Did not work out at all. The secondary is responsive and was really expecting a push above the prior high, at least the overnight high, before the market starts selling that scenario too. It did not give us that selling at all, and we ended up with a market that actually dipped below the prior low. And you can see here. Let's put a profile on here. So these are 2 days on top of each other, so they get an MC, a micro composite profile. And you can see that we closed right on the MC point of control, 2909.75, a point of balance for these last 2 days. The market had a lower high, lower low, dipped into 2950, which is the gap mid. So if I turn on my master levels here, you'll see that the gap mid is right there at 2950 with 2900, the century figure beneath it. It pushed to 2900, popped back up to the mid, which was just an interesting, it was a setup, but I passed on it simply because we did test a century and the gap mid. I was concerned that it would run up, consolidate, and push through. In fact, on a shorter time frame, it looked that way, but ultimately it ended up tagging the mid here beautifully and rotating back down, yielding about 5 points, 5, 6 points on that particular on that particular push. And so to me, it just seemed like another. It looked to me like it would consolidate and push through, which it's done quite a bit of right here. Consolidate and just push through, and that's the expectation. But overall, we broke the one-time framing up. We did push into the gap, but we ended up finishing right back in the MC point of control on a profile that is really terrible looking. Look at this profile. It's super thin, super choppy, super non-committal. At least on Friday, we had a clear upper distribution and a clear lower distribution, giving us a double distribution profile, whereas yesterday it was very thin. Also, volume was way off. Now remember, it is it is a shortened week. It's spring break this week in Chicago. Not that Chicago controls all the volume, but a fair amount of it. Is spring break in Chicago, and volume was about 30% off yesterday. So just take that in as a factor. It's not really auctioning. It's with its normal volume. Okay. The delta yesterday remained below zero while the market remained below the open. Again, we did not bother to push that overnight high. We dipped right off, which was not something I was considering as a high probability yesterday. Coming into the overnight session, we just got industrial production. Industrial production came in at negative 0.1 versus 0.2 expected. Cap utilization also lower, 78.8 versus 79.2. This is a lower tier figure. Here's what we got overnight. Let me move this over here. I'm going to show you in a second. Sorry. Here's what we got overnight. We reopened and pushed right into the prior day's high, right there to the tick, pulled right back to the open, almost to the tick, and then it was all just positive from there. The European Open was right here. pull back to mid. Look at this structure, just beautiful structures, right? Respecting day time frame levels. And then it pushed to 29.21 and a quarter, and we have a double top up here with a point of control near the high, a very distinct low volume node in the overnight profile, giving us 29.17 as a key area to watch. Um, there's a stock zone there. Yep, 29.17. That's a stock zone, an old stock zone as well. This will be an important area for me to watch right here, 29.17, to gauge what is likely to happen next. If we push through, then I'm going to be looking for it to revert back towards 29.1050 or so. If we don't, then we're likely to continue pushing higher, and 29.27 is within reach. So strong consolidation with a point of control in the upper distribution, quite bullish coming into today. Okay, if we look at what's going on with my overnight chart, here we go. If we look at the overnight, just the heat map, if we look at what's going on overnight with the heat map, you see these strong pop-offs. Well, you see these strong pop-offs here that we saw in the overnight chart, and you see it just going vertical again and again and again. There's just a lot of pressure to the upside and holding steady. There's not much more to glean from the heat map so far. Oops, from the heat map so far, and hang on, my mouse is acting weird. As we start to move into, you can see this block of offers that started right here in bids with the U.S. Getting close to the U.S. Open at about 6 something. There's always this algo that kicks in about 5:30, 6 o'clock. And you can see there's just a huge block of offers up above, with a lesser block down below. So this is the market's intent. It does not. This is showing you the market's intentions. The actual prints and trades show what the market actually did, and that's what you see on your chart. You don't see the intent. You see what has actually printed. So back to the overnight session. A pretty distinct profile, pretty good volume, and pretty good action overnight. It held some really key areas, and tested some important day time frame levels. Let's take a look at what we're expecting for today. So actually we need to move lower. So today we have a market that's gapping up again. As usual, for a gap, we're looking for an open auction out of range. I'm looking for it to revert back towards that 17 area, and I'm looking for a pop higher above the overnight high. I'm looking for us to push towards the 29.2350 and then ultimately to 29.27. And then to come off. It is Tuesday, expecting a little more volatility than we have on Monday, but I'm looking for a bullish continuation given the way the overnight formed. I'm going to be sitting out the first 20 minutes to a half hour just to see what the intent is. Does it respond back and push into this micro composite back here these last 2 days? Or is it supported and therefore it's a gap and go situation, in which case I'll be only trading from the long side. Again, if it does not get responsive, in other words, if I don't see that sellers are starting to move this lower, then I will only be looking to the long side. Be smart, look to the long side with the market. A gap and go situation is quite bullish. Secondary scenario, We start to drift up, push into the 23 and a half, consolidate, put in a lower high, and then cross the open and start to move towards 17, consolidate. And here, if it breaches the 17, then I'm looking for it to move towards 29.11, and that'll give us about 12 points of range, which is expected. If not, then it's likely to stop, turn around, and go end up somewhere in the middle in the 29.20 area. I know I don't usually draw a scenario with two heads on it, but it could go either way. It's not really a third scenario. So those are the two key areas. As the market opens, I want to watch carefully and see, do the sellers step in and get territory back from the buyers? Do we have seller interest that is actually gaining ground towards the prior 2 days action, or is it supported and we end up with a gap zone below? We have something that is somewhat similar to what we did on Friday. That's really the big question. That's what I'm looking for. Traders, it is really important to understand the story. The narrative and the context is what gives you strength. Getting in on a pre-designated trade or pre-designated setup may work statistically, but I don't know many traders that'll stick with that without understanding what the market context is. In other words, if you're doing an OR trade or an opening swing trade or an IB trade that is like consistent. We break the IB, I get long, break the IB low, I get short, or I designate a 30-second, 1 minute, 5 minute, 10 minute, 15 minute, or 20 minute opening range. Those are all opening ranges that actually are traded on the pit and online. As soon as it breaks the high, I go long. As soon as it breaks the low, I get short. That may work on a systematic basis. You may back test it and find out that it has a probably somewhere around at least the ones I've tested, somewhere around a 43% win rate and about a 52% at best a 52% win rate, but still you can manage the trade and make money off of it. But I know very few traders who'll continue to take the trade when the market's in an open auction and it's chopping and it's taking out the high, the low, the high, the low, the high, the low, without recognizing that there's no directional bias on the open and jumping in on that trade. You're likely to pay up pretty good. And most traders online are not trading a big enough account to withstand that kind of a drawdown. So just be smart, understand where the market's coming from, understand that this is an auction and that price is just a discovery mechanism. It's trying to find the whole point of the market is to find as many buyers and sellers as possible, find the price in which the highest number of buyers and sellers can participate. That's the market's job. That's eBay's job. That's what Manheim Auto Auction's job is, to bring as many cars and as many buyers in to get them to buy and sell cars at some price. That's what the market is. This is what an auction is. This is what we're trading. So understand what we're doing versus the prior auction gives us a pretty strong point of reference. And then the volume profile simply details how much interest there was at each price. Okay, very important stuff. Trade with your eyes open, and volume profiling and looking at auctions cannot hurt whatever system you're using. Good luck, and I'll catch you tomorrow. Take care.